response businesses, people can give to this crisis. Our analysis, World Energy Outlook, looks as usual between now and 2050, the global energy system, but we focus in this report for the next few years until 2030 to look at the global energy and climate dynamics. My colleagues look at the entire energy system, all fuels, all technologies, energy technologies, the entire geography around the world, and there are many interesting findings, charts, numbers you will see in our report, which is freely available in our website. So, in this report, there are, as I said, many findings, but there are two issues, two questions I ask my colleagues, Mrs. Kozi and Mr. Gould, to look into. The first question: is the current energy crisis going to slow down or to accelerate clean energy transitions? This is question number one. Question number two is: how can we secure resilient energy system in the future? What kind of energy system we have to build in the future, which is much more secure, much more resilient? What kind of measures we have to take? So these are the two questions we try to answer in this report. Now, starting with the first one, some of the members of the press would remember only a few months ago I said this energy crisis could be a turning point in the history of energy by accelerating clean energy transitions. And now, looking at the results and the findings of the World Energy Outlook, I can confirm that the numbers here, the analysis here, do confirm that the government responses around the world given to this energy crisis promise to be that we are seeing a turning point in the history of energy, and this crisis indeed accelerate clean energy transitions. We look at the numbers. This is our job, the data. We are seeing unprecedented increase in different clean energy options. Solar PV, wind, batteries, heat pumps, nuclear power, energy efficiency, in all of them. My colleagues will very soon going to give you the numbers. But dear colleagues, why I am optimistic is we look at the responses coming from governments to this crisis. Inflation Reduction Act from the United States, $400 billion on the table. In terms of tax incentives, subsidies, different support for clean energy technologies ranging from hydrogen to solar to carbon capture and storage to nuclear, electric cars and others. In Europe, we have Repower EU, again a major package putting on the table, accelerating the clean energy transitions. In Japan, we have Green Transformation of Japan, a major new plan. China, India, they have increased their renewable and clean energy targets and supported with real money there. So why governments are doing this? There are three reasons. Number one, energy security. Today, the biggest driver of renewable energy in many parts of the world is energy security, not necessarily climate commitments as it was before. So, energy security, number one driver. Number two, of course, climate commitments. And number three, the many governments want to be a part of the new industrial era based on clean energy manufacturing. So these three drivers, energy security, climate commitments, and industrial policy, when they come together, it's a very powerful combination, and it is the reason I am optimistic that we are going to see an acceleration of clean energy technologies. And as a result, as my colleagues have calculated, the clean energy investment today, which is about 1.3 trillion US dollar as of today, will reach in 2030 with the current policies to about 2 trillion US dollar. A 50% increase of clean energy investment with the current policies in 2030. Something to be happy about, or at least optimistic about. Another important finding of our study is that for the first time, in the current policy settings, again without pushing the climate commitments, just with the current policy setting, we are seeing a peak of fossil fuels, a distinct peak of fossil fuels in 2030s. It is for the first time since Industrial Revolution we are going to see a peak of fossil fuel around 2030s. Decades and decades, the share of, in the last 3-4 decades, the share of fossil fuels in the global energy mix was about 80%, more or less constant. And now, around 2030, we will see this share will fall down below 70%. Again, this is in the scenario in the current policy context. Additional policies to push the clean energy technologies may well mean that this 70% will even go further down. Dear colleagues, we also look at the impact of that. So this is there is a peak, but this doesn't mean that the world will not use fossil fuel. The world will still use fossil fuel, oil and gas, at a lesser extent coal, and as a result, in the current policy context, with the current policies, our numbers show that the global temperature increase would be around 2.5 degrees Celsius. And my colleagues also look at the very important fact that more than 100 countries around the world, before and after Glasgow COP26, made pledges. If those pledges of those governments are fulfilled, what would be the temperature rise? And the temperature rise, if those, again, if those pledges are fulfilled, it will be temperature rise will be about 1.7 degrees Celsius. Again, an improvement in this area. So in terms of 1.7 degrees, it's a good news, but it is still far from the 1.5 degrees, and there is also no certainty that the governments will do what they said they would do in their pledges. So from that point of view, if we want to reach our net zero targets, on which we last year made a very detailed report, we still see there is a significant gap. There are many important achievements, but in order to secure a 1.5 degrees result, for example, the $2 trillion I mentioned, the clean energy investment 2030, needs to double and reach 4 trillion US dollars. So this is therefore, there is still an important gap between the pledges and where we need to come, at least where we need to come as the International Energy Agency. But we still believe that given all the difficulties we are facing today in the global energy markets, to reach 1.5 degrees target is still achievable, getting more and more challenging, but still achievable from energy sector point of view. Another important point of our report is on Russia. So Russia, dear colleagues, based on our numbers, as of 24th of February this year, Russia was the number one fossil fuel exporter of the world. Oil, gas, and coal, putting all of them together, number one fossil fuel exporter of the world. But Russia lost. It is by far the most important client, the market, Europe. 75% of the Russian natural gas exports went to Europe. 55% of the Russian oil exports went to Europe. And it will be very difficult for Russia to compensate, to find new clients to substitute Europe. It will take time. It will not be easy economically, technologically, and from a political perspective. And therefore, what we are seeing is the Russia's production and exports for oil and gas will decline in the next years to come. As a result, Russia's role in the international energy affairs will be diminished, much diminished, I should say. In terms of oil and gas trade, Russia's share will decrease significantly. Why Russia's share will decrease? Because there will be less opportunities to substitute their exports to Europe and elsewhere. As a result, my colleagues have calculated that as a result of the decline in the oil and gas sales between now and 2030, Russia will lose about $1 trillion of export revenues. The last 2 points I wanted to mention is first on natural gas. Some of the colleagues who follow our work closely would remember 2011, we made a report. Again, in this series of World Energy Outlook, our flagship publication, this report was called Golden Age of Gas, 2011, when the shale gas revolution has been identified by the IEA. We said if the shale gas revolution continues, what would be the gas consumption in the world? And we came up with a rather bullish projection. We said in the next 10 years, we made this report 2011, global gas consumption could increase by about 700 BCM. It was found rather bullish and radical by some, but when we look at the numbers in 2021, we were spot on. It was a golden age of gas. But this report, World Energy Outlook we have, says us that we are approaching to the end of the golden age of gas. The demand, especially in advanced economies, are in a decline, mainly as a result of the renewables in the electricity generation, heat pumps and efficiency in the buildings, and the growth in the developing countries. There will be still growth in the developing countries, but this will not be as strong as before due to the high prices we are seeing. Having said that, the pipeline connection between Russia and Europe will not be on the table anymore, and we see that the LNG markets will see a very strong push. LNG will play a more important role, but the sustainable growth of LNG markets will, among other things, will hinging on whether or not we can make the LNG infrastructure compatible with our climate goals. So the last point, dear colleagues, I wanted to mention to you is how can we reduce the risks of future turmoils like we are seeing today. There is a very detailed analysis in our report, several hundred pages, but if I can try to summarize at the cost of being to simplify it too much, I see there are basically two options. Either clean energy investments today, growing, I said, and they are going to reach, with the current policy context, $2 trillion in 2030. And the energy demand around the world will increase with the economies increasing, with the urbanization and others, because energy means better lives, productivity, and the comfortable lives. So, either we meet this energy demand growth by increasing $2 trillion clean energy investment to $4 trillion, and the more and more growth in global energy demand will be met by clean and secure energy sources. This is the first option, which will bring us in line also with the 1.5 degrees target we have. This is the first option we have. The second option, if we fail to increase the clean energy options, technologies, in order to avoid further volatility and insecurity in the markets, we have to further increase fossil fuel investments to have security of energy supply. And of course, in this case, you can address the security in a different way, but you are going to jeopardize our climate goals. And I believe there is also a business risk here. So we have these two options in front of us. And from International Energy Agency point of view, we believe, and our analysis show, that we can at the same time address energy security and climate challenges by increasing the clean energy technologies which will provide a secure future. So to finish, dear colleagues, I believe when we look at this year, 10 years from now, I believe we will see that 2022 was a year where the clean energy technologies see a major turbocharging. And this World Energy Outlook is a testimony for that. And I would like to thank my colleagues Lara Cozy and Tim Gould and their wonderful top-notch team for bringing this work together. Thank you very much.
So, that is introduction. Now, Tim Gould and I will take you through the main findings of the World Energy Outlook. So, let me start with giving you something that I would call the heartbeat of the global energy economy. What you're seeing here is an historic perspective of how good or how not good the global energy economy has been going over the past 50 years. And the more you go up, like really when you measure your heartbeat, the more countries you see hitting high level of inflation, the reason for being worried and flashing red lights is what this graph tells you. Today, we are approaching 100% of countries hitting very high inflation levels. We need to go back to the 70s, to the previous oil crisis, to see incredibly high level of inflation. Now, governments around the world, in our assessment, have already spent and are spending over $500 billion to shield consumers from these increasingly high prices, to shield companies and to shield families, to try to avoid this increasing risk of a global recession. A major and important difference from the period of the 70s is that today governments around the world have many more tools to address these crisis, in particular, clean energy technologies. So if I go back to the very first questions that Dr. Birol asked at the beginning of this presentation, is this crisis a setback or a boost? This answer that you'll find in this outlook is very clear. Let's have a look at clean energy investments. Clean energy investments, since the Paris Agreement was signed in 2015, they've been growing, but at a rather modest pace. We have seen a first jump in 2021. Why? Because countries out of the COVID crisis started putting in place sustainable recoveries. They started putting money against ambition. And now, what's happening? Over the past several months and over the past year, we are seeing an increasing amount of policies being put in place, not only the policies, the money backing those policies. And our expectation is that all those new policies put in place will give a very big push to hit a 2 trillion mark for clean energy investment by 2030. This is for us a lift up, an increase in expectation already compared to last year, and a 50% boost compared to today. Dr. Birol mentioned what are the key policies that are helping countries to go in this direction. The US Inflation Reduction Act, the European Union increasing discussion of meeting and ratcheting up ambition in the Fit for 55 towards Repower EU, Japan, but also increasing ambition in emerging economies on solar, on EVs, is pushing this clean energy transformation and accelerating it. Would this be enough to be on track with a 1.5 degree trajectory? Not yet. We would need to double that number to hit 4 trillion, and where we see most of the job to be done is in emerging economies, and Tim will come back to this in a moment. For us, a critical aspect to be addressed at the coming COP, in particular when we see that those countries are the ones suffering the most today from this energy crisis. We estimate 75 million people that had access to electricity will be losing it this year because they are simply not able to pay their energy bills. There is one sector in particular that for us is moving ahead and really turning the corner. This is electricity. You have heard certainly, and we have heard and read a lot of news of countries turning back to coal for energy security reasons, to make sure that the lights are on for the population. This is happening in Europe. We are also hearing of an increasing amount of countries in Asia wanting to build new coal-fired power plants. For us, what's happening is the following. In 2022, as you can see here, it's true coal had a muted growth in terms of producing electricity, but already solar and wind were larger than the increase in coal. And once you actually put in place the policies and measures that are already approved, so this is the steps world we are in, we will see that this is just temporary. By 2025, coal is going to be on a downward trajectory, and by 2030, we will see even a steeper decline. What's happening is very clear. Clean energy technologies, solar in particular, are becoming very cheap. Supporting policies like IRA are really even helping to make solar even cheaper. And the expectation is that in the next 5 years, solar installed capacity will surpass that of coal to become the number one capacity installed for electricity generation. One of the several historic turning points that we will be witnessing in this coming decade. By the end of this decade, this means that clean energy, not only solar, we see wind there, but also nuclear. Nuclear that is for reactors that are already present, existing, that will see a ramp up in production. This is the case for Japan, some European countries, but also new nuclear. So when you put all the clean energy technologies together, by the end of this decade, we'll be producing more electricity from clean energy than from fossil fuel. This is another turning point. What does it mean? Clearly for emissions, this is a good news. We will be seeing a peak in electricity sector emissions very soon, and emissions will start to decline. This is exactly what we need to keep the temperature stop from rising. Who is leading this change is clearly advanced economy. You see really a nosedive in emissions. Is it fast enough? Not yet, but it's another acceleration and another very clear sign of acceleration. Could we move faster? And for us, the answer is even a clear yes. We have been tracking over a range of different clean energy technologies how are manufacturers behaving and reacting to the current new policy setting. And what you see here is that in many cases, for many critical clean energy technologies, solar PV, batteries for electric vehicles, electrolyzers, we are seeing an incredible lineup of new announcements, of new plans. In all cases, those will be above what would be needed in steps in the current policy setting by 2030. In some cases, we are even meeting what would be needed in a net zero by 2050 trajectory. Of course, not all of these projects will see the light of the day. Not all of that will get financing. In some cases, there will be difficulties aligning supply chains, and Tim will come back to this in a second. On the other hand, we know that a lot of the recent announcements in policies will actually create a very conducive environment for technologies beyond those ones. Heat pumps, IRA in Europe, really booming. We are seeing a lineup of new projects. And beyond that, CCUS, DAC. So for us, what we're seeing on the ground is a reinforcement that policies are credible, and there is a triple alignment, as Dr. Bilal mentioned earlier. Those are technologies that help facing the energy security crisis, the affordability crisis, and the industrial policies of countries. Now, if we turn to fossil fuels, we had Dr. Bilal mentioning this just a minute ago. 10 years ago, we did a special focus that was called Are We Entering a Golden Age of Gas? And what you see plotted here was our demand projections back then. And if you see how the actual numbers realized, were actually very, very close to what we have seen in markets in reality. So 10 years later, we can actually drop the question mark and say, yes, it was a decade of golden age of gas. Now, going forward, the outlook is very different. This decade will see a very modest growth and then a very long plateau. Why is this happening? It's happening for a variety of reasons. Policies, first and foremost, especially in advanced economies, the ones that we have heard earlier, especially in the power sector. What's happening? We have many more technologies that can produce electricity in a much cheaper way than gas. So the key driver of gas demand growth that we have seen over the past decade is drying up. And in fact, for advanced economies, we're going to see even a decline in gas use in the electricity sector. Other key driver that is drying up is the one for heating in buildings, as efficiency measures, electrification, and beyond are really putting an end to this growth. As you can see here, however, we are going to see two diverging trends. In advanced economies, a peak and a decline. In emerging economies, a continued growth. Continued growth that is going to be pushed mostly by industrialization. This mismatch has implications also for trade, and Tim Gould will take you through those.
Thank you very much indeed, Laura. And when it comes to gas trade, of course, we're all aware that in recent months, Russia has cut gas deliveries to the European Union by around 80%. And we assume that there's no way back for the EU-Russia gas relationship. That relationship was built up over 50 years on the basis of trust, and that trust has disappeared. As you can see on the screen, Russia's trade with China does pick up, but it replaces only a fraction of the volumes lost in Europe. We'll come back to that in a second. But what I wanted to focus on here is really the story around LNG. And the spotlight is very much on LNG as a key supply and balancing force in global markets, especially in Europe and in developing countries in Asia. Gas demand in the steppes, as you can see on the left-hand side of the screen, a 5% increase, but there's a 25% increase in LNG trade. And the big question that we have is, will today's tight markets produce an uptick on the investment side? And there's a dilemma there because gas business is a long-term business, but the uptick in LNG demand today might not last, particularly in Europe. So we need to look carefully at business models for any new long-term gas investments and ways to make them compatible with energy transitions, for example, by integrating CCUS or building in the use of low emissions gases. And there can be no clearer sign of the changes underway in the energy system than the picture that you're looking at now. For the first time, as Dr. Birol mentioned, today's policy settings are strong enough to generate an overall peak in fossil fuel demand before the end of this decade. And alongside that plateau in gas demand that we just heard about, coal demand peaks within the next few years. Oil demand reaches a high point in the mid-2030s before falling back, and that has a lot to do with the expansion of electric vehicles. Fossil fuels and the emissions from their combustion have risen every decade since the start of the Industrial Revolution more than 2 centuries ago. And now all of our scenarios have a growing global economy, growing demand for energy services, alongside a reduced role for fossil fuels in meeting those needs. And that's why we're calling this a pivotal moment in energy history. And within that broader context, the challenges facing Russia are particularly sharp. As was mentioned, prior to the invasion of Ukraine, Russia was the world's largest fossil fuel exporter. So if you put oil and gas together, Russia was exporting about 50% more oil and gas than the next largest exporter, which was Saudi Arabia. And if we look back to our projections from the World Energy Outlook 2021, which is what you're seeing on the screen, our expectation was that Russia would easily maintain that position. But this has all changed. Russia's share of global oil exports drops once the new EU ban on imports kicks in, and gas sees an even steeper drop. So gas exports are set to halve from today's level by 2030. And those declines highlight the difficulties that Russia faces to find alternative markets for all the resources that used to go to Europe. And also our judgment that the sanctions on Russia's access to capital and access to technologies will affect its ability to develop new, more challenging resources, for instance, in Eastern Siberia or the Arctic, or indeed to build new LNG projects. And as a result, Russia does face a much diminished role in global energy. And I'd just like to pick up one point here on gas exports, because some people assume that Europe's loss is China's gain, that Russia will simply ramp up gas exports to the east as exports to Europe fall. But things are really not that simple. Aside from all the infrastructure issues, our projections underline that China is changing too, and that gas demand growth in China's future is nowhere near as strong as it has been in recent years. So in our view, there's no obvious room in the Chinese mix for another large capacity gas pipeline from Russia beyond the existing Paris-Siberia pipeline. As the Executive Director mentioned, energy security is a really key theme in this year's WEO. In particular, this issue of maintaining affordable and reliable supply through transitions. And I wanted to illustrate a few of our points from the outlook here. So for the next few decades at least, we will be drawing down a system based on fossil fuels and building one up based on clean energy. But the key point to have in mind is that we need both parts to function well for the duration of that transformation. You can't just let the fossil fuel system freewheel downhill, and the speed and security of the transition depends on synchronizing changes across different parts of the energy system. And indeed, some parts of the old infrastructure can also be reused or repurposed to find a place in the new one. And that brings us to this crucial issue of investment, which Dr. Birol already mentioned. So this is where we are today. For every dollar spent on fossil fuels, around $1.50 is spent on clean energy transitions. And you may recall that we get to 2 trillion by 2030 in the stated policies, but we need to come to that 4 trillion number by 2030 to get on track for a 1.5 degrees scenario. Note that even in such a dramatic scenario, the amount spent on fossil fuels is not zero, but that ratio has changed. It's not 1 to 1.5 anymore, it's 1 to 9. And as Dr. Birol mentioned, under those circumstances, we have choices about how we choose to guard against the possibility of future volatility. The preferable way is to follow what's on the screen right now, a massive scale up in clean energy investment. But if we fall short of that, then avoiding volatile markets will require then higher oil and gas investment than what you're looking at on the screen. But that then comes with a very substantial risk. It puts our climate goals in jeopardy as well. And as we scale up investment, the fastest growth needs to come in emerging and developing economies. And that's, as Laura mentioned, that's where energy demand is also growing most rapidly. But clean energy projects face an additional hurdle in those markets, and that's the high cost of capital. Cost of capital for a solar plant in key emerging economies is between 2 and 3 times higher than in advanced economies and China. And if we want to get secure transitions all across the world, then we need to tackle the risks that deter investors and financial flows from these kinds of projects. And I think COP27 is a key opportunity for advanced economies to show the priority that they also attach to this issue, in particular on the discussions on climate finance. And finally, the world needs to be very attentive to new vulnerabilities affecting energy security. We highlight a few issues in the book, but the one I wanted to focus on here is about the security of clean energy supply chains. So we have to be very wary of swapping one energy security vulnerability for another. Today it's gas, tomorrow it could be cobalt, it could be rare earths. And production of many of these minerals is very concentrated, much more so than the existing supply of oil and gas or coal. And our demand for those minerals is really going to increase substantially as we move through transitions for clean energy technologies that are reliant on those mineral supplies. So in that net zero by emissions by 2050 scenario, demand for critical minerals increases by a factor of 4 already by the end of this decade. So there's a lot of work to be done to scale up these supply chains and make them more diverse. Finally, a word on what all of this means for emissions. As you can see, emissions have risen steadily over recent decades. And prior to the signature of the Paris Agreement, our baseline expectation was that they would continue to rise, putting us on track for a really catastrophic 3.5 degree rise in long-term average temperatures. But as we saw earlier, we're now approaching a peak in fossil fuel demand, even under today's policies. And that's naturally associated also with a peak in emissions as well. And that improvement with key technologies and key policies has already shaved around 1 degree Celsius off projected long-term warming and compared to our pre-Paris baseline. So that brings it down from 3.5 to 2.5. Obviously a better outcome than before, but still not enough to avoid severe effects from climate change. Can we reduce it further? Can we shave another 1 degree off that long-term outcome? And as the Executive Director mentioned, if countries follow through in full and on time with all of their pledges, then, and companies also do what they have promised, for instance in aviation or shipping, then we can limit that long-term rise to 1.7 degrees. But there's still an awful lot more to do beyond that to reach that net zero emissions by 2050 outcome. To round up, a couple of brief conclusions. So we've seen the damage done by Russia's invasion of Ukraine to people, to industries, to energy markets. But the government responses to today's crisis open up a more hopeful perspective as a turning point towards a cleaner and more secure energy sector. Russia started this crisis as the world's largest fossil fuel exporter, but we are really witnessing a profound reshuffling of energy trade that is leaving Russia in a much diminished position. And we're also approaching that landmark moment in energy history. Global economy, global fossil fuel use, they've been marching upwards shoulder to shoulder for more than 2 centuries. But they are about to part company. And clean energy sources will need to step in and step up to accompany the global economy further. But we really need that massive surge in clean energy investment to keep the door to a 1.5 degree outcome open. And without that, we would need higher oil and gas investment to avoid a renewed bout of fuel price volatility, but that would also put our climate goals at risk. And finally, today's energy crisis reminds us that the journey to a more secure, inclusive, affordable and sustainable energy system may not be a smooth one, but it also makes it crystal clear why we need to press ahead. Thank you very much.
Thank you very much for the presentation. We now have some time to take questions from journalists. We invite the journalists in attendance to please send your questions through the Q&A function of the Zoom if you haven't done so already. And please mention your media outlet along with your question. We'll now take a 2-minute break to give you a chance to submit your questions. We'll be right back.